Hi, everyone. I am Amy Valdivia, and I'm honored to be your host today on the Divorce Podcast. Whether you're the family law professional, a financial expert, or someone navigating the complexities of divorce yourself, this podcast is your go to resource for trusted insight on how real property and mortgage financing intersect with divorce outcomes. We talk about strategic solutions that protect futures. Why do we have these different guests? Because you're going to hear today why you need to be protected throughout all of your life twists and turns, especially divorce. Let's dive in. Today, I'm here with Ms. Carly Ebenstein with CJB Insurance Services. Yay!
Hey, thank
Welcome,
you so much
welcome,
for having me.
welcome. I'm
Thank you,
so
Amy.
glad you're here. Yes. We've been talking about this interview for a little while now, and I've known you for quite a while, and I'm very happy to share your expertise and your insights with our community. So tell us, who's Carly, and tell us about your practice.
So I'm Carly Ebenstein, and I've been an independent insurance broker for 30 years, which is so crazy. My specialty is life and long-term care insurance. I lead with education. I truly enjoy collaborating with other professionals like you and financial advisors and estate planning attorneys, I mean, anyone that really kind of reaches out and has another perspective. It could be another insurance broker. I mean, collaboration is just really fun. And, it's always in service to the client. So I hold webinars regularly, live webinars regularly. And I just believe that the best clients are the clients that are educated to the point where they're not sold. They are making educated decisions, regardless of whether they work with me or purchase something or not. They just know more about the decisions that they're making.
So why divorce? Why did you jump into the divorce arena?
Well, I'm divorced. And I remember when I got divorced in my late 40s, I felt really vulnerable. And I had been married for 18 years and never thought I would get divorced. And I did. 9 months after I got divorced, my ex actually passed away. And so even though we were divorced, we actually had a very amicable divorce. It was mediated. And I will share personal information and say that he actually left me the beneficiary of his life insurance, even though we were divorced. And I still felt very vulnerable.
Mhm.
And I'm actually a very strong person. I'm from the East Coast. I'm kind of tough, New Jersey, New York, lived in the Bay Area for 25 years, but I felt really, really vulnerable. And so two things. One, I really saw what a difference having that life insurance made. I still felt vulnerable. Having the money didn't necessarily solve that problem, but it was like, oh my God, I can tell you even right now, and it's been 11 years since he passed away. And I can tell you that I still think about how grateful I am and what an incredible act of generosity that was, and how my life would have been very different. Would I still have been able to pay my bills and get through life and, have a good life? I'm sure, but I can tell you, having that little cushion made a really big difference in my life.
So let's talk about that because you just said it's an act of generosity. But as we both know, in divorce, not all divorces are as amicable as yours. And so it may not be considered generous. It may be a tool used in negotiations.
Absolutely.
So talk a little bit about that because your philosophy that I've come to learn is not just about the protection and making sure that you're not feeling so vulnerable. It's using this as a tool in the divorce as a negotiating piece.
Absolutely. I mean, when people get divorced, I mean, as you know, and you may be more involved in the nuts and bolts, but there could be alimony, child support, but this could actually be part of the alimony and child support because what happens if that person who is supposed to be paying this alimony or child support, what happens if they pass? What happens if all of a sudden that faucet is turned off and there hasn't been some kind of lump sum arrangement, which there rarely is. I mean, there is, but we can't really always depend that there will be. This is just another way of structuring agreement and making sure that someone you care about or cared once deeply about is taken care of, regardless of whether they're children or not. Of course, if they're children, I mean, I will tell you that 95% of the clients that come to me for life insurance are young families. And they always say, I want to make sure that my mortgage is paid, or if they don't have a mortgage, I want to make sure that nobody has to make decisions under duress, that my
Right.
kids have a good leg up through college. They all say that. And so why would that change if there's divorce? And I think that it's really a smart thing for other divorce professionals who are helping their clients, look at life insurance as part of the toolbox, part of the solutions to make
Right.
people whole as possible.
Now, one of the things when we first met, we talked about long-term care. Tell me
Yes.
about how you factor in long-term care in a divorce.
Well, I'll go back to myself again. So that was actually shortly after I got divorced. I actually purchased my own long-term care policy. Now, I'd already been selling it. I purchased it for my parents, but now I was thinking like, okay, I think it's actually time for me. But aside from the fact that I sell it because I could have waited, I was actually feeling really vulnerable. I was feeling like, okay, not that I ever imagined my ex taking care of me because that these are special skills that you have to have. I mean, people do DIY it and we hear and see what that looks like. But I was also feeling like, I need to stand on my own 2 feet now. I need to take care of myself. But the funny thing is that now that I'm on the other side and I'm talking to people who are getting divorced, and sometimes they come to me and they say, well, I'm getting divorced, so I really want to look at long-term care insurance. And I'm very respectful, but deep down, I'm not laughing out loud, but I'm laughing a little bit because divorce really isn't the reason, even though I was that person too. It's not the reason because like I said, these are special skills and we really need that. It's really a gift to the loved ones, if you have long-term care insurance. But divorce can just be such a big trigger to like look at things that maybe you didn't look at before, take care of things that you never thought were essential. And I mean, does it really matter what the reason is? Loved ones will be happy if you have a long-term care policy.
Okay. So for those listeners that are going, okay, I know that someone's going to take care of me and someone's going to be happy that I have a long-term care policy. What exactly is a long-term care policy?
Ah, I'm so glad you asked that question. Long-term care insurance is like buying a big pile of money. You pay this much, so this is a visual thing. Let's say you pay, I'm making up a number. Let's say you pay $3,000 a year and you're buying a plan that will pay you $4,000 a month, growing at 3% compound interest, and is expected to last for 4 years if you are getting the maximum amount from day one all the way for straight for 4 years. I just use these simple numbers.
Sure.
Long-term care
Right.
insurance costs more, all this other stuff. But I will tell you that I don't advise to overinsure, especially if people have assets and they come in believing or believing that they can self-insure or really it's self-fund. Because I say, okay, really, there is going to be cost sharing involved, most likely, because otherwise the policy would be so expensive. So how much do you want to cost share? And when people come in like that, I say, let's go with something, moderate. $4,000 a month growing at 3 or 5% compound interest, that's not a very rich plan, but it's really going to help out. It's
Right.
going to make a difference. And the
Mhm.
thing is that once you actually get this plan and you sign the final documents and you make the first payment, you're covered. So if something happens a month later, whether it's a diagnosis or it's an accident, which a lot of times it's accidents, all of a sudden you can turn the faucet on and you have this stream of
Okay.
money coming in. Of course, there are a lot of ways to customize it. So, we can customize it where home care is available immediately. We can customize it where premiums do not need to be paid once you're on claim. And the only requirements once you have this are that you have to have problems with the activities of daily living. What are they? These things happen within the first hour of waking up. You get out of bed or chair, so transferring, getting out of a bed or chair, that's an activity of daily living. Walk over to the bathroom, walking. You shower or bathe. You use the toilet. Continence is an activity of daily living. You get dressed and you eat something for breakfast. So transferring, walking, using the shower or bathing, toileting, dressing, and eating. If you have problems with two of those activities of daily living, you will qualify, and it's expected to last
Oh,
at least 90 days.
okay.
Not that it has to, but it's expected to. You will receive benefits.
So now, what do you say to that human that is working and, oh, I have long-term care through my job, and now all of a sudden they're facing divorce? Why do I need more insurance or not?
Well, I'm going to tell you that most people don't know what they have.
Mhm.
And people have told me they have long-term care insurance and they don't. They have long-term disability insurance. And long-term care insurance is available for companies, but that is like the Wild West. Not that many companies have it. So I'm always a little bit suspect, like, okay, show me what you have. But I
Right.
will tell you that people who have it through their work, it's great to have for sure, but there usually are limitations, and it's
Okay.
usually kind of a window dressing kind of thing. So you have something, but let's look and make sure that is this how good is this coverage? Is it really something that you really want to rely on if that's all you had?
So, so reiterate now, you talked about the reason why insurance in general is necessary in a divorce situation, or it could be a great bargaining tool. How could long-term care now impact the divorce
Impact the divorce or the divorce?
settlement? There you go. Good girl.
So, you know, long-term care, the service is not cheap. So in California today, average cost start at about $8,000 a month. That's average. A lot of people say, I don't want average. I want more. So it's gonna cost more than that.
Right.
Now, the average amount of time that somebody's on claim is 4 years.
Oh,
So if you're paying $8,000 a month, or someone is giving up working to help with someone, but it's kind of almost the equivalent, giving up that, it's like, do you really? And let's talk about inflation, and let's talk about the fact that if someone is getting divorced and they're in their 40s, 50s, even 60s, there's still a chunk of time that maybe they're anticipating they're going to need this care. So it's going to be that much more expensive.
right.
And so it should definitely be factored in, because that is one of the biggest ways people actually go bankrupt, is paying for these massive expensive. And I didn't even get into cognitive decline. So I mentioned those activities of daily living, but sometimes, like my mom was very physically capable and active, but she had cognitive decline.
Okay.
That was enough to qualify to receive benefits. And when someone has cognitive decline, because they don't have stress, they tend to live longer. And the average amount of time that someone is on claim with cognitive decline is, there's actually debate in my industry, but it's very safe to say that the average is 8 years. Some people are saying it's longer.
That's like double a policy period when you just quoted 4 years average. Wow.
Yes, cognitive decline. It doesn't have to be Alzheimer's or something we think of as like, I mean, usually the person does decline to that point, but you can qualify way before you're in that point. You can qualify once, I mean, when you're diagnosed, and you can, and I can talk to people about that because people tend to get diagnosed much later
Right.
because there's so much denial and not recognizing signs. But we'll get back onto track with divorce. I mean, these are expenses that really need to be considered when someone is thinking about any kind of settlement or alimony, because that is seriously a one-way ticket to bankruptcy.
Yeah. It's not just about that monthly paycheck that you are envisioning. It's all of the ancillary care that you could potentially need or require if either of you become ill or need, right?
Yes,
You mentioned when we opened, you mentioned about collaboration.
yes.
Tell me about that philosophy and how much you really do enjoy collaboration. I've seen it in your face. And tell me why you feel it's essential during a divorce.
Well, I really think that even without a divorce, I feel like most people do either have a team or should have a team, and a
Mhm.
team that can communicate with each other. A tax person, a financial advisor, a realtor, an attorney. you know,
DLP.
Yes, all of yeah, a DLP, absolute 100%. You guys have incredible specialization. And so we all kind of learn from each other. And like I always say, I know enough to be dangerous, and I do, like about a lot of these areas. And so when I'm talking to someone like you and you're working out, helping somebody decide about like keeping the house, selling the house, all the tax implications, this is another piece of this pie, that needs to be really considered because we've touched on, when you're thinking about settlement, you're thinking about based on somebody's income. But what about extrapolating into the future in terms of what you will need? And so I feel like I can really bring that to the table for divorcing clients. I learned so much from all the people who are involved in supporting those divorcing clients, like financial advisors. I actually went through the personal financial program through Cal. I didn't sit for the exam because by that point, I actually had like a nice little business, and I also
Yeah.
met great financial advisors. And so I could collaborate with them. I know enough to be dangerous. I did go through the course, but it's not fresh. Things sound familiar. I love
Right.
to talk with them. They bring up all kinds of topics, and they're very anyone who's a CFP, has a very holistic understanding of finances. But then when you add the divorce element, that's a whole other area of specialization. Honestly, when I was getting divorced, I wish I knew about all the people that had divorced specializations. And I was selling a house without, without
Any Yep.
expertise. Who knows what would have happened if I'd had that expertise?
And isn't it amazing? What are the risks when collaboration doesn't happen? Now you're walking alone through this
Yeah,
process, thinking, I hope I'm doing the right thing.
exactly. Absolutely. I mean, I'm not going to blame anyone. Like, we mediated our divorce. Maybe if I had worked with an attorney, they would have had this checklist of different people I should talk to. Maybe, I don't know. But I just think about it was a vacation house, so I'm not taking it as seriously. But I
Right.
just think about that's what I did, but I didn't really, I was just hoping I was doing the right thing. I didn't know. Maybe there was another way. I don't know.
And you made that comment, well, if we had worked with an attorney, what we have found, the beautiful thing is as we have moved in a direction where we are doing more collaboration, we're not just working with the attorneys, we're working with the mediators, we're working with people like you, we're working with even coaches and such. We seem to be opening our minds and embracing the thought of collaboration. And so we are creating lists from all of our perspectives. I know I have a list of individuals, of course, you're on it, where I'm going, okay, you need someone, I've got a girl, right? Regardless
Yeah,
of where you are in your divorce process. Of course, the attorneys and the mediators can help make sure you're crafting that settlement with the appropriate documentation. But you and I, and even the CFPs, we all give language and contribution to what that final settlement looks like, right?
absolutely.
So, with that said, give me your words of wisdom. What's that one piece of advice that you would give to either a divorcing client or even a professional that is looking at a really ugly divorce?
Oh, I would say to the divorcing person, like, it's okay to be vulnerable, and these professionals are here to support you. And I would also say, please don't DIY it.
Mhm.
Sometimes the most expensive road is DIY.
Right, right,
For example, I can tell you so many people like think like, "Oh, I'll get my insurance online. I don't have to do this, blah blah blah." It doesn't cost any more money to work with me, and
right.
you're going to have a much more personalized experience rather than just being shoved into a specific product, which is really most likely what will happen. Um, as far as the professional, I think I think that once, like I mean, you correct me, tell me if I'm wrong. I'm under the impression that once somebody has entered this area of supporting divorcing clients and they have that either specialization or radar, they're already in a very collaborative mode. They understand all the different aspects that need to be considered. That's my impression.
We when in my opinion, when there's a professional that has a specific area that they focus on, an expertise, they definitely recognize the need for collaboration. Remember that commercial, stay in your lane, bro, stay in your lane. I know my lane. I have no desire to ever say long-term care and insurance. And let me tell you all about, no, that's not my lane. That's not my expertise. I don't want to misguide anybody. That's when I'd say, okay, call Carly. However, there are certain circumstances when I tell people, remember that legal solutions may not equal mortgage options because they're two total different ends of the spectrum. My job is to do this.
Yeah.
My job is to bring the two together to be able to say, that sounds great on paper, but let me tell you what's going to happen when it comes to execution. And now give them the information to tweak that settlement in order to make sure execution is done properly at the end. So
Yes.
it's definitely, I recognize, you're right. I do recognize the need for collaboration. At the same time, we need to make sure we're putting that message out to everyone and get everyone to agree to that. So,
Yeah.
with all of the people that you've helped over the years, what's that one case that you'd be willing to share some information that just really touched your heart and you said, yep, this is why I do what I do?
Oh God, there's so many. I'm actually working with, so this is a client, a very interesting man who has a complicated life. He lives in California. He contacted me about 7 or 8 years ago and to get a
Wait,
long-term.
stop. He lives in California. You practice nationwide?
Yes,
People need to hear that part. But
I
you're
do.
based in,
I'm based in Colorado. I lived in California for 25 years and I help people all over the country.
okay, perfect. That's what people needed to hear. Go ahead.
Thank you. He's in California. He contacted me about 7 or 8 years ago. And actually said, well, I want to get long-term care insurance because my daughter told me I need to get it. I'm like, okay, that's very typical. A lot of times it doesn't follow through because it didn't
Right,
come from the person,
right.
but he did get it. And then what happened was during the process, I found out that he actually was a resident of South Carolina, but he was living in California. What? And he actually got South Carolina rates. Why was he living in California? Because that's where his kids lived, and that's where his ex-wife lives.
So he wanted to still be there with,
And so that was 7 or 8 years ago. And very recently, like I'm working with them now because it's time to file a claim. I found out he has some physical things, but he has some cognitive decline
oh,
a little bit.
right,
He's not too far gone yet. And he hasn't been diagnosed yet, but he doesn't remember when to take his medications and things like that. Who's helping him? His ex-wife. His ex-wife has been and his kids are helping out too until the claim goes
right.
through. But his ex-wife is the one that is keeping track of his medications and folding his clothes and like just kind of like around as kind of a support. And so it's not the ugly divorce, but it's like I'm so touched by this. And that's why, even though he was a resident of South Carolina, he's living in California to be close with them. So this long-term care insurance policy that he has is really going to help out because there are so many different kinds, but he actually has a cash benefit. And once
Mm,
it goes through, he's actually going to be able to pay his family for all the time that they're spending with him. If he ends up needing to go to a facility, and I have a feeling it's going to be a real struggle because he really
right,
likes his home. But, then there'll be money there for that. But in the meantime, he can actually pay his ex-wife. He'll be able to compensate his kids who are taking time off from work to help out. And
right.
so that just really touches me because I can see how would they been able to make it without this policy? Absolutely. There's money there. They'd be white knuckling it. It would be stress, but I can hear in the voice because the daughter actually has power of attorney, and I can hear how it's a huge relief that this money's going to be coming through very soon.
That sigh of relief. Oh, that what a great story. Great story. Thank you for sharing that. Well, okay, for those listening, if you need that kind of support, please, Carly, tell them how they can find you.
Great. So you can contact me by email, which is Carly, Carly, at cjbins.com. That's C as in cat, J as in jewelry, B as in boy, the first three letters of insurance.com. Or you can call me at 510-342-2670. And if you Google my name, Carly Ebenstein, hopefully I'll come up. I've got a Google page. I've got a brand new website that's launching next week. I've got so much information on there because I believe in education. And I just want to thank you so much for this time, Amy.
Oh, this is fantastic. I'm glad. I'm glad that we were able to put this together. Any last thoughts that you need to share with the listeners? Because clearly you have a wealth of information to share.
So the last thing I want to add is many times people are under the impression that they use the term self-insure, which they're not insurance companies, but that they can pay for care themselves. They can self-fund. And sometimes they're told this by professionals and I'm just going to make up a big number, because they have $4 million or $5 million, whatever it is they've got, and someone says, you don't need to worry about this. You can pay for your care if you need it.
Right.
And what I would say is, please let's have a conversation because there might be a better way to do this.
Mm.
And people make a lot of assumptions that it's expensive or it's hard to get. And that isn't always the case. And so I would say, please don't act on hearsay or an assumption. Look into it for yourself.
Thank you. Thank you for sharing that, because it can be an affordable addition to your life, especially when you're negotiating in a divorce. You
Oh,
never know. This could be an additional piece that's added to your settlement that may be something that you pay for over the course of multiple years, and it doesn't affect your cash flow today.
yes.
Thank you so very much for joining us on the Divorce Mortgage Strategies podcast, powered by the Divorce Lending Association. If today's conversation brought you clarity, insight, or inspiration, we encourage you to subscribe and share this episode with others in your circle. Please, if you want Carly's information and you didn't catch it in the episode, listen to the recording, reach out to any of us at the DLA. We are happy to get you in contact with her, and we'll get you all connected. For more resources or to connect with a CDLP in your area, please go to the divorcelendingassociation.com. Until next time, remember, in divorce, the mortgage really isn't the problem. It's the plan. Thank you so much.
Mm.
Have a great day.